I hate StreamYard, just so you guys know. I hate it. It does what it wants. Okay, where's my music? Good morning, and good morning again. I am here. It's episode 11. Thank you guys for tuning in to Secure the Bag with me, of course, your host, Stephanie Beard. Um, it is February the 9th already, you guys. Already in the second month of 2026. This is a short month. Of course, February is the best month. It is my birthday month. Welcome to Monday Bills the Bag. Again, I'm your host. And I'm going to get right on into it, you guys. The title of the show, as you can see on the screen, is Understanding the S&P and the NASDAQ. You know, because the market has been very fickle for the last couple of weeks. But before I get into it, I got to get my disclaimer in. Let's see where to go. Okay, things aren't working today over here. I'm clicking on my photos here. Hold on. Okay, here we go. Let me get into that disclaimer, right? This is not financial advice. I am not a financial advisor, as you guys know. Everything is for education and entertainment purposes only. Please trade at your own risk. Please trade at your own risk. I don't know why I'm trying to. Okay, there we go. There I go. Please trade at your own risk, you guys. I am just here to assist and just tell you what I do in the stock market. So remember, today, just remember that this is your freedom fund. This is you basically your safety net and your future security. So I just want you to know that the market can be very fickle. It goes up and down. That's just what it is. Last week we talked about when the market crashed, how to deal with it. Again, discipline is a big word here. Patience, being patient. So today I'm helping you understand the market step by step in simple terms. We're going to break down something you hear on the news all the time. As you know, that I tell you to do your research and do have resources when you do trade. And squawk on the street is it for me when I'm watching and on the TV. So the market can be up and the NASDAQ can be down. The S&P can hit a new high, but what does that actually mean? So today we're going to be talking about the S&P 500, the NASDAQ, why does it matter, and how investors use them. So let's get into it. Let's build this bag. All right, let's get into it. So the S&P, let me pull up my slide. This is so the S&P is made up of the 500 largest companies in the United States. So think of it as a scoreboard for the U.S. economy. It includes companies like Apple, Microsoft, Amazon, Johnson & Johnson, Coca-Cola. When these companies do well, the S&P usually goes up. When they struggle, the S&P usually drops. That's why many investors use the S&P as a snapshot of the overall market. If the stock market were a basketball game, so think of it like this. If the stock market were a basketball league, the S&P 500 would be the all-star team. And just so you guys know, the NBA All-Star will be here next week in Los Angeles. It's going to be it's not going to be like it used to be. But anyway, back to the show. So the S&P 500 would be the all-star team. Big companies, stable companies, and established companies. So think as that. Just know that. Now the NASDAQ. Okay, that's the wrong slide. Now the NASDAQ, you guys. Let's get into the NASDAQ. Let me pull up my slides because I can't see them that good. There we go. What is the NASDAQ? The NASDAQ is different. It's heavily focused on technology and growth companies. For example, Apple, Nvidia, Tesla, Meta, Google, all the top tech stocks, because tech companies grow fast and sometimes they also fall fast. The NASDAQ tends to move more aggressively than the S&P. Let me take a sip of my potion here. Now, think of it, if the S&P is the all-star team, what do you think the NASDAQ is? The NASDAQ is the fast break offense. It has more speed, more growth, and more volatility. So why do you think that investors watch indexes? Investors watch the S&P and NASDAQ to understand the market direction, to understand, and it's also give investors confidence. It's also the economic strength, and it's a risk appetite. So instead of tracking thousands of stocks, indexes simplify the market. It's like checking the weather forecast for investing. And you can invest in indexes. You don't have to just pick individual stocks. We talked about this, ETFs. You can invest into the entire index. Again, ETFs have those big bundles of baskets. They have baskets of stocks. They have baskets of stocks. You don't have to pick individuals. So you can invest in, for example, SPY. SPY has a whole lot of tech up in there. VOO, V as in Victor, OO, or QQQ. We talked about this. These are the most common beginner strategies. These are the most, and so as you can see up here, you can see the difference between S&P 500 versus NASDAQ. Because S&P 500 carries all those large companies, and NASDAQ is going to get all the tech companies in there. So just remember that when you're listening or doing your research, or you're watching Squawk on the Street or whatever, Yahoo Finance, just know when they say the S&P 500 is up and the NASDAQ is down, you know why. All right, let's get back over here. Okay, trying to hide it. There I go. Now, here's the real talk, you guys. A lot of new investors think that they need to find the perfect stock to make money. But the truth is, many successful investors don't try to outsmart the market. They invest with the market. That's where understanding the S&P 500 and NASDAQ becomes powerful. When you invest in indexes, you're not betting on just one company. You're betting on the overall economy and innovation over time. That's a different mindset. So many beginners don't, you guys chase those hot stocks. Don't do that. And then you follow social media trades, try to get rich fast, and you trade emotionally. That usually leads to frustration. Indexes teach discipline. It teaches patience, and it also teaches long-term thinking. When you understand the indexes, meaning S&P 500 and the ETFs and NASDAQ, when you understand these indexes, something really changed, and you stop asking yourself, what stock should I buy today? And you start asking, how do I grow my portfolio? That's what you end up doing. How do I grow my portfolio consistently? And that's how investors mature. Building a bag isn't about excitement, it is about consistency. Slow growth still builds wealth, and steady investing still builds freedom. Discipline will always win. And I'm telling you, discipline, I had to learn how to be disciplined, even just this, you know, I gotta when I'm preaching discipline, I gotta take it in myself because the last week with the market crashing, you got to stay disciplined. You don't need to beat the market to build wealth. Sometimes the smartest move is just simply growing with it. And that's how you build your bag. Now I'm gonna get into my trades. This is the point where I get into my trades and I have to stay disciplined, you guys. Mm. Because the market again, it crashed. It actually crashed. It didn't crash like in 2020, but it did some crashing. So I'm gonna get into the trades that I have. I have options in play, and I have stocks in play. When stocks drop, it's fine. You could go in and buy more of it. Okay. Today, I told you guys last week that I was down. When the market crashed, I lost close to $8,000. But I wasn't worried. I went in and I did what I needed to do to get my cost average down. And I brought that loss back up to now my 1 week. And that was a 1 week loss. $8,000, close to 8,000. It was like 7,000 plus. But that 1 week, that was a 1 week loss. Now I'm just down to $1,000 loss, which I'm fine with. So what I did was get my cost average down. Now, my most options I have right now are in silver, as you know. Silver has fell all the way down to $60. And if you didn't go in and buy silver for $60, shame on you. Because silver hit $107. When it hits those type of numbers, it will eventually get back to at least 95 or to $100. Silver is creeping back up. The sellers are battling. Don't get me wrong. They're still battling. The bears are there, but the bulls are also there too. Right now, silver is up to $73.76. It is up $3.57. Now I have options I have plenty of options, but I have my options out to February 20th, which that is the one that I had two of them and I sold and made a nice little mint on that. And it dropped all the way, dropped down. So now I'm creeping back my way back up before February 20th before I sell it. I probably won't get that same profit again, but I will get some profit. I definitely will make the money I put back in. So it's never a loss for me. Then I have other options that don't expire until the 20th of March. Those definitely will make profit. I also have an Irene option. That one fell all the way down. It went all the way up to $60. It fell all the way down to, let me see where Irene is at right now, because it is slowly creeping back up. It is at $43.46. Now remember, you guys, the stocks I told you, the top 5, that's under $50. All these stocks are now under $50, including Irene. Irene was up over $55 when we were talking about it in before. It hit over the $50. Irene is up $1.86 right now. It is at $43.65. And I just be beating these 5 stocks in your head because these stocks will make you profit. APLD, let's tell you. Let's see where Applied Digital is at. Applied Digital is up $2.77 right now, $37.73. It is under $50. It was an under $30 stock, but it is creeping back up. It is up $2.80. If you were an option trader, you would be in, and you made some great moves when it was down, you would definitely see a profit right now. Okay, let's get into IONQ. IONQ is up 26 cents. It is still under $50. It is at $35.28. And that one kind of move. These SoFi and Lyft move very slow, you guys. They take the scenic route, but guess what? By 2030, these are going to be $100 stocks. Right now, SoFi is up 26 cents. When we talked about it on Friday, it was at $16. It is $21.13. So 16 to $21. If you would have bought it at 16 or even 15, because it went all the way down to $15, you would be up $5-6 right now. Okay. So far is at 2106, still a great stock there, $50. And Lyft, of course. Lyft have been going back and forth. Lyft is only $16.72. It's up 26 cents today. It went down to $15. So this is what I'm saying. Lyft and SoFi is going to take the scenic route. It's going to take a slow time to get to where it's going to get, but it's going to hit those targets, guys. It's definitely going to hit the targets. Let me try. It's definitely going to hit the targets that I'm telling you. So those are the top 5 stocks, and you just can't really beat not being in the market when it's that. And then also, again, if you didn't see the episodes where I talked about capital gains and taxes, just remind yourself. But when you leave the stocks in the market, you don't have to really worry about the profit so much. It's when, I mean, you do have to pay taxes, but you got to just make sure that you put a little money aside. You can take it from the profit that you have. When you go into these platforms, you don't have to sell the entire stock. You could just sell dollars amount. Say, hey, I want to take out $50 from, say you have $300 profit and you just want to take out $50. Those Robinhood and Webull allow you, and Thinkorswim allow you to take that out, as well as putting it in and purchasing stocks. So I think I'm going to go ahead and start talking about cryptocurrency next. And then we're going to get into the options trading, you guys. I know you want to learn about the options, but options, again, I just want you to understand how to purchase stocks. You have to get into being disciplined and learning how to purchase the stocks, learning about the companies and why you bought these stocks. I gave you already a head start with the top 5. Okay. Let's get back to the trading. Let's see. When I talk about the S&P 500 and the NASDAQ, I'm looking at Squawk on the Street right now. Bitcoin has fallen all the way down to $69,000, you guys. Bitcoin is targeted to go to 220K. 220K. And you can buy, again, you could just go in, say, hey, I just want to buy $50 of Bitcoin. You don't have to buy it, the whole $69,000 Bitcoin. You can buy portions of it, partial of the stocks. So just remember that. And as I'm looking at the market, because again, when I go to the market, I let the first 30 to 45 minutes just ride. And what's key to buying stocks, you always look at volume. You look at how many people are purchasing that stock today. Today, I have one option that I know I just told you with silver that I have to make a decision to try to sell before February 20th. Today alone, the volume is already in the first, it's been almost over 45 minutes. The stock has, the stock exchange have opened. It opens at 6:30 a.m. here on the West Coast. So far, 1,238 people has bought that same contract. The open interest, when you look, remember, I showed you the whole platform, the whole format of Robinhood. When you look at open interest, that shows how many contracts that people are still holding. Right now, for that particular option, there's over 36,000 people still holding that contract. And that is good because people still have confidence that this contract, that this particular option will go up. And I know I'm speaking on options. I'm just letting you know what I'm doing right now. So right now, I'm only 20% up. I remember with this particular option, I was up 796%. And so that's where you have to know. And on that part, I made a mistake. I could have sold both of them, but I didn't, which I should have, but I didn't. But again, it was house money. It wasn't money that I put in. It wasn't money that I lost, that I took from my personal savings or my money that I hold in Robinhood. to put in. It wasn't money. Again, all the money that I'm using right now is house money. It's all profit. I have not taken money from my bank account in years. All this money, all my portfolio is money that I've made over the years since 2018. So you will eventually get to that point. But of course, you don't like losing any money, but that's what happens. You just got to stay disciplined, be patient, you guys. It is never not going to stop. Building your portfolio, you eventually will get to that. But next on Friday, when we build that bag, we're going to talk about. We're definitely going to talk about cryptocurrency. And then I assume by the end of February, early March, we'll get into the options trading. And again, option trading is fast money, but it also will make you lose money fast. So again, that's why I'm trying to help you build that portfolio with stocks. Build that portfolio with your stocks. Buy your favorite stocks. Buy stocks that you use. If you use Apple, buy Apple. If you use social media, if you use Facebook and Instagram, Meta owns that. And yes, Meta is an expensive stock. You use Google every day. Those are tech stocks. Again, if you just want the ETFs, buy the bundles of the basket of tech stocks. Google, Apple, Nvidia, all of those stocks are in one basket if you want to do that. And again, those stocks are, yes, when you go in and you see, hey, those are expensive stocks. Google is too expensive for me to purchase. No, it isn't, because you can just buy $50 of it until you get to the amount of the stock itself. So right now, Google has it's Alphabet. That's the ticker symbol for Google. Alphabet A and Alphabet C. So right now, it is $323.12 for Alphabet. I do own Google. I bought Google a while ago. And you know how I build my Google up? I put in $50. I set it up in Robinhood to put $50 into the account every 2 weeks. So right now I'm holding just 5 stocks of Google by putting in, and my average cost is $132.17. I am up 144% on Google. You can set it up in whichever platform to deposit $50 or purchase Google every 2 weeks. So that's $100 you're purchasing of Google while the stock is at $323.37. Same thing with Meta. Meta is going to always be a great stock. Meta is $663 right now. I own Meta. My average cost for Meta is $249.59. So I bought Meta a long time ago, but I'm up, and I just own stocks. I don't have any options in these, and I'm up 165% on Meta. So these type of stocks, you guys, you can build your way to being a part of it. These type of stocks should be in your portfolio. And after months and years, you will see the growth, and you will have a nice portfolio. And for me, Robinhood is my biggest portfolio. And then I have Webull. I started off with Webull. Let me get into my Webull. I started off with Webull, and I usually just do stocks on Webull. I do options over there sometimes, and most of the time I just do stocks with Webull. And with Webull, I got 5 minutes. With Webull, I just took some money out of Robinhood, put it over there. And the stocks that I own for Webull, and I'm gonna tell you the first ones I've owned, and some of them are down and been down for years. NIO, N-I-O. NIO is a company that is like was supposed to be like Tesla, but from China. I have 42 shares. I am down on this particular stock. My average cost is $17.60. The stock price is only $4. So I'm under. I can average cost it down, which I probably will end up doing. I am down 72% on that stock. So I'm just telling you the bad part of it, of what decisions, because NIO was slated to become the net very similar comparable to Meta, but obviously it's not doing that. Okay, and no, I haven't sold it because you know what? It could do just exactly what Lemonade did. And if you don't recall that episode, when Lemonade was a company that I purchased a while ago, and because it was it partnered up with Meta, with Tesla, it jumped all the way back up. I took all the money that I put in it out of it and left the other half as profit in there. So I doubled my money, and it went all the way down. So down that I bought it for $111, and it fell all the way down to $17. But then when it then partnered up with Tesla, it it was already slowly trying to get back to where it was. It was midway, but then once it partnered up with Tesla, it jumped all the way up, surpassed the amount that I originally had purchased it for. But I had cost averaged it down. I had bought more of it when it was low and more of the stocks to average the cost out. Lucid is another one. I don't even want to talk about that one. I only own one share of Lucid, but I bought it for $72. It is only right now $10.96. Okay, but Lucid may do well. AMC hit its 52-week low today. I am down on fair, but I made money off of AMC. I've sold half of it and just let it be. Average cost is $62.12. The market value is only $8.25. These are stocks that I am under. It's not too many of them. It's just really those three. ADT, I was giving that one free. It's under. I got 5 shares of those. OCGN, that one's down. So those are stocks that I really don't. I don't really care about those, but they're there because they could turn around. Now, the stocks that are doing well, I got 3 minutes, are doing well that I have on Webull. Amazon. I own Amazon. I own Roku. I own Disney. I own Google. PayPal is down, but I own PayPal. SPY is the basket of tech stocks. Nvidia. I own Nvidia. I own Chipotle, and Chipotle has been down for a while. Anyway, we'll talk about Chipotle another day. I own APLD. I own SoFi. I own there's another one, 20 shares I have of WULF. That was a penny stock. It's only $4.80. I bought it for my average cost is $4.81. It is now up to $15.89. Okay, that's how much I bought it for, and I have 20 stocks, and it's up to $15. I bought it at $4.80. WULF, TerraWolf. Lyft I own, and Silver I own. Oh wait, when did I buy this? It doesn't expire till January 2027. All right, you guys. So it's winding down right now, but these are things I want you guys to know. Now you know what the S&P 500 and the NASDAQ is. You don't have to guess when you hear these correspondents on Squawk on the Street or Yahoo Finance. You don't have to guess and say, what is that? What are they talking about? Now you know. Now you know what that means. Let's see. Here we go. All right. Now, the market isn't just about picking stocks. It is about how the market moves. The S&P shows you the economy. The NASDAQ shows you innovation. And they both help you make smarter investing decisions. Learn the market, respect the market, grow with the market. Because on this show, Monday builds the bag. This is Secure the Bag with your host, of course, me, your Laker girl. And I'll see you guys at the top. You guys, I'll see you back here on Friday. Make sure you have a great week. Enjoy your week. Stay safe out there, y'all. Peace out. Wrong one. Outro.